those are lines to trade. You know, you want to keep an eye out for them. Nothing you can do with them right now. So just keep moving on. You'll find other situations where there might be like a bunch of lines all on top of each other.
Yeah.
My best advice for the algorithm is just stick to cells. The easiest way to just make profit is use the lows, which are the red lines, right? You hover your mouse over it. It'll tell you, oh, it's the daily and the weekly line, or you know, whatever it might be, weekly and a monthly and a yearly. The higher the level that is, the stronger the line. So if you get a line and you hover your mouse over it and it says yearly and monthly, that's a lot stronger than, say, daily and weekly. In fact, I tell most people to turn off their daily lines. That's fine. Okay. All right. So anyway, you're going to keep scanning through your pairs. You're going to miss setups. You know, there's going to be lows that are identified that are going to actually be buys. But once again, you're going to be looking for a very specific pattern to take. And you'll never catch this trade, because this is, you can see this dash dotted black line. That was the changing of desks. So you wouldn't be trading during that time anyway. But typically every night I'll just scan through my pairs, looking for a proper setup. Like I said, a lot of charts, they're not going to have any lines on them. Some will have more than others. Some will have none. Some will be just confusing. Like this is a great setup right here. So we got USDCAD. We got a line that's a month and the daily. Now I'm kind of 50-50 on a line like this. Typically the daily levels are not as strong. So what I recommend a lot of you guys do, if you do have the daily levels on, go into your indicators list, and then you're just going to turn off your daily levels and set that to false. And you'll get much cleaner setups. Just a recommendation to you. It's a lot stronger of a trade, much more likely to be successful. I had, who was it? Carlos took a sell on odd NZD and ended up losing. This line has been intact for a while now. If you hover your mouse over it, it's a weekly and a monthly line. So weekly and a monthly line is a strong line. That's a good place to be. The issue is it wasn't coming up as a strong sell. So the issue that he ran into was originally the line kind of like extended over here, right? He saw a price come up and play around with it. He figured, oh, it's a sell, and he went for the sell, but it just didn't happen. And part of the reason for that was, if you take a quick look at currency strength, you'll see that odd is stronger than NZD. Ideally, when you're looking at like a setup like that, you want to have a stronger currency in your favor. So if you're looking at odd NZD, you want NZD to be stronger, right? So it's going to be a force that drives down. So your setup here would be the trade coming up to this line and staying underneath it, testing it once, testing it twice, and then you would take your sell here and it would drop down. But since odd NZD, the currency odd is too strong, it's pushing it up. It's stuck in here. If you look at this candle pattern here, it's just a mess of, like, you don't want to trade that. Like that's not a pattern you want to trade. You don't want to speculate here and say, oh, you know, it's going to be a buy, it's going to push up. There's clear situations and there's just like chaos. Try to go for the clear situations, the things that line up perfectly. Do you know what like the perfect setup is? Maybe not. Okay. So the perfect setup that you would find would be something that comes below a line, right? So you're looking at a weekly and a monthly line. You want price to come up underneath it. Test it once. So here's your first test, right? And you want to see it test, drop down, test one more time, and then you would take the sell. That'd be a perfect entry trade. Ideally, you want your stop loss to be somewhere between 25 and 50 pips in that line. And typically,
Okay.
what I'll do.
Okay, you mean if it tested like 2 times, it will be perfect setup?
Yeah.
Okay.
Yeah. So typically, I'll look at the 15-minute or the 5-minute and see what I can see.
Okay.
As you can see, it's tested once, right? It tests the line once. It dropped down a little bit. We'll see if it tests one more time, and if it does,
Okay.
we would take the sell. Now,
Okay.
your stop loss. Yeah, your stop loss would be somewhere between 25 and 50 pips. A lot of the time, what I like to do is if I'm not, if I'm actively trading and I'm in front of my computer, I won't put a stop loss and I'll just have a mental loss, because your exit for a trade. So say this, you took this sell and it didn't work out. You would know when it didn't work out when price came above the line, dropped down, touched it, came above the line again, touched it again, and started moving higher. Once you got into that 20-ish pip range, that would invalidate the trade. That'd be saying, all right, well, it's looking more like a buy right now than it is a sell, and you would jump out of that sell. So from the front of my computer, I'm not rocking a stop loss. I'm using a mental stop loss. I'm looking for that reversal pattern, right? And if I'm in front of my computer, I'm not feeling confident, I'll use 25 pips. If I'm away from my computer, I'll set it somewhere between 25 and 50, just to be safe. You want to protect your account. You want to use a proper lot size. You don't want to go too crazy, right? And then as far as take profits go, that's where the fun comes in, because it can kind of be limitless, right? So if you look at this from a grand scale, in theory, there's plenty of room to drop. You could drop to any of these levels here, right? So one of the things I like to do is I don't like to use take profits when I'm trading the algorithm. I prefer to just let it run. And one thing that I'll do is I'll start using trailing stops. So as it drops in the profit, I'll trail it by 20 pips. I'll trail it by 30 pips. Whatever it might be, I'll manually start moving that stop loss, moving it deeper into profit and turning it into a free trade, right? So now I know I'm in a situation where I'm not going to lose anything. I have only things to gain. How much can I gain? Because as much as I love to believe in take profits and stuff, they're not very accurate. My take profits are more often than not hit, or I miss, or they hit and it goes so much further. This is just a way to capture that entire move, and then if it reverses on you, it's a way to get out of it as well. So I'll keep scanning, looking for some more pairs here. I untangled it. Nope. Okay. All right. The daily and a weekly level, it's kind of weak. There's price is pretty far away, right? So you're like 40 pips away. So we're not going to mess with that. All JPY, nothing going on. CADCHF has a little bit of action. You got a yearly and a weekly level at the bottom, and towards the top you have another weekly and yearly level. So you're going to want to just keep an eye on things. When price is stuck in between ranges, just keep an eye on things. Don't try to enter it. Don't try to make a decision. Don't try to make this a sell, anything like that. Let it come up the line. Let it let it make a decision for you. Make sure that it's a good trade rather than going in blind. Same situation here on CADJPY. AutoCAD, don't particularly have any lines. Just double check that. Nothing going on. CADCHF. Nothing crazy. Daily, like I said, I stick away from the daily lines. I actually turn them off. Not a big fan of taking buys in general. It works a lot better shorting for some reason in these markets. Here's a good level. You got a weekly and a monthly level here. I would keep an eye on that. There's nothing you can trade right now, but if it were to come up to it, bounce below it, and then fail, and then touch it one more time, I would definitely take the trade. Okay, what do we got here? All right, so we had a little action over here on CHF JPY. You can kind of see that price got really close here, tested once, fell, tested one more time and fell. Depending on your broker, this line could be a little bit higher, it could be a little bit lower and look perfect. Everybody's broker's data is a little bit different, so the lines will shift around a little bit, ever so slightly. This could have been a decent sell, but it didn't particularly touch the line itself, so I'm not sure if I would have taken it. That's really it as far as lines go right now. You know, sometimes you're going to have better trading setups later in the session. Like I said, it's still really early. If you're looking to trade the software tonight, definitely be on your terminals looking for setups. You know, have it open, because once a line is hit, it's going to alert you, right? So as you're hanging out, there's going to be a pop-up. It'll go ding. It'll show you the trade. It'll tell you the pair. It'll tell you exactly what line and what price. And you can just quickly switch right over to that line and figure out if it's going to be a good setup or not. But once you get the hang of things, once you get the knack of things, you're going to find that you're getting into trades where there's literally zero drawdown. So for example, like this line was important, and it pretty much touched here once. There's going to be situations where the pair is only going to touch once, and you're going to have one opportunity to get into it. Ideally, like I said, perfect setup is 2, but sometimes you're just going to take the sell because it touches it once, spikes it real quick, and falls. That's up to you. As you progress with the software and such, you'll be able to make that decision for yourself. But outside of that, do you have any questions? I think it's been a little while since you've traded the software, NZDUSD. I'm not sure. If you guys got any questions, you can type it in, you can shout it out. I'm sure you got some questions, Melvin.
Yeah, can you hear me?
Yeah, absolutely.
I got a question for you. If I remember from your previous videos that you sent me, you were saying that, you know, with the video where you, oh my goodness, you maximize the $1,000 deposit to $25,000.
Right.
What were your lot sizes when you were doing that? Because I'm about to deposit about $1,000 myself, and I'm just curious.
Sure.
I do the demo that I'm doing now. What
right.
are you doing?
Okay. So do you know the value of lot sizes in general? Like, do you know how much a 1 lot size is if it moves 1 pip in your favor? How much profit is that?
Not really. Can you explain?
Okay. Yeah, absolutely. You got a pen and paper? I'll just give you a quick little thing to write down. Let me know when you're ready.
I'm ready.
Cool. Awesome. So the first number I'm going to write down is the lot size, right? So it's going to be 0.01, and that's equal to 10 cents per pip. That's the smallest lot size. We're going to move up from there. We're going to do 0.10, so 0.10. That's equal to $1 per pip. And then we're going to bring it up higher than that to 1 lot, which is equal to $10 per pip. Now you have to, one of the biggest issues that traders come into is they over leverage, because leverage is this double-edged sword, right? So if you have a 1 to 1,000 leverage account and you have $1,000 on it, you can place a 10 lot trade. Well, how much is 10 lots worth? That is, every pip in your favor is $100 profit. Now that sounds really enticing. Oh, perfect, Nick, I'll place 10 lots. The issue is if it goes 10 pips against you, you lose your entire account. So you have to be very careful with your lot size. For me, once you get comfortable with this software, you can increase your lot size. And the reason for that is you're gonna have very little drawdown, right? So for example, if you sold USDCAD, you would be expecting very little drawdown because prices just played in these lines. So you can go a little heavier on the lot size. So $1,000 account, you're saying, okay, well, how many pips will I be able to play with if I use a one lot? Okay, well, $1,000, you have 100 pips to play with. Well, if each trade, you know, I know I'm wrong. If it goes 20 pips against me, how much is 20 pips worth? $200. All right, so I can be wrong 5 times. Well, I have to be wrong 5 times in a row for me to lose my entire account.
Right.
But I'm using, you know, I'm using a system that has 70 to 80% win rates, right, on the right setup. So you're putting the odds in your favor. You're putting a larger lot size on the line, and you're getting out of the trade before you get too deep, right? That's how you have to figure your lot size. So if you're thinking about placing a trade, just look at that little sheet you got written down, figure out how much money's in your account, think of a lot size. So $1,000, you can start off with, you know, one lot and say, all right, if it goes minus 200, I'm out. If it goes plus 200, you know, I'll secure $100 of that. Whatever your strategy is, everybody has a little bit of a different strategy using the software. It's kind of like a, you know, learn as you grow with it, because everybody kind of comes up with their own solution. But that's how I made 1,000 to 25,000. It was using strategic lot sizes. I had that piece of paper written down. I said, okay, you know, my account's at $2,000. I'll bump it up to 2 lots. You could do it that way. You could say, all right, rule of thumb for me is I'm going to do 1 lot per $1,000. And by the time you get to $5,000, you're going to be using 5 lots. So every pip that moves is $50. So if it goes against me, 20 pips, that's minus 1,000. If it goes towards me, 20 pips, that's plus 1,000. And you got to kind of play it like that. You're kind of risking a lot of your account in theory. Yeah, you're playing with this 20% of your account balance, but you're also putting it on good bets. You're betting well against a trend and a trade that's going to work out in your favor.
Got it. Okay.
Yeah.
That makes sense.
What other questions you got for me? There's got to be more.
Can you explain that? Talk more about that meter.
Sure, absolutely. I'm going to drop it into the chat. It's an indicator. You can put it anywhere on your chart. You can put it up in the top or bottom, left, right. You can change all the colors. Show you. It's going to go right into your indicators list. It's just a currency strength alert. Just a quick little thing. You can pick the colors of each one. 1 through 7. You can choose which currency pairs you want it to display. Play around with the settings and stuff. It has alerts if you're interested in that. Since my charts are black and white, I just chose black. But basically, when it comes to currency strength, you want to start looking for trades that are in your favor. So right now we're looking at USDCAD, and we want to sell it. So the thing is, you have two pairs against each other. You have the US dollar versus the CAD. And ideally, you want to sell USDCAD when CAD is strong. Because if USD is strong, USDCAD goes up. If CAD is strong, USDCAD goes down. So on the meter, it'll have numbers ranging from low to high. The high numbers are strong currencies. So when you're going through your charts, you're thinking, all right, well, AUD is strong, Euro is strong, GBP is strong. And then you're saying, all right, well, I want to take a sell. What's going to be something that I can stack against it that's going to be weak? USD, CHF, JPY is kind of weak, right? So you could take a look at EURJPY and be like, all right, well, if I'm trying to buy it or if I'm trying to sell it, you just want to make sure you're picking that stronger currency. So you want to try to sell something that in the second portion of it, it says GBP or AUD or Euro. And you kind of want to, you know, decide that, hey, if USD is the weakest, it's most vulnerable. So anything's going to beat USD. So for example, USDJPY should be going down, and it's going down, right? Currency strength meters are kind of like a guide for you to figure out what's strong and figure out what's weak. What else pairs we got? Any other USDs? So for example, the opposite of that is GBP USD. USD is weak, GBP is strong. GBP USD is moving up. Same thing with Euro dollar, right? Euro is strong, USD is weak, Euro is moving up. AUD USD, USD is weak, AUD is moving up. It's like, I guess, you know, what you really just want to do is just use it as a tool, but don't rely on it too much because it is, in theory, a lagging indicator. So even though Euro's super strong right now, that could change in a second, and USD could be the strongest. So just use it to your advantage. If you find that it lines up with a lot of your trades, so for example, we were looking at USDCAD, and you can see CAD is stronger than USD. You know, you can say, all right, well, this trade makes sense. And you can use this tool to say, well, you know, if USD was the strongest, I would not try to sell USD CAD. You know, if CAD's super weak and USD is really strong, you would be setting yourself up for a losing trade. That's what happened to Carlos earlier. You know, he was looking at AUD NZD and he sells it because price, you know, price was down here below the line. And he's like, what the heck, Nick? Like AUD NZ kind of jumped up and, you know, took out that 20 pips, whatnot. Like, what happened? I told him, I said, look, if you check your currency strength meter, you would have seen that AUD is like a powerhouse right now. And you know, you wouldn't have taken that trade because look, AUD is the strongest currency. So are you gonna try to sell AUD? No. Yeah, that's like a major tool for a lot of people. Some people believe in currency strength, some people don't. It's just another tool in my box. But I'm gonna drop it in the chat for you guys so everybody has it. Yeah, I mean that's pretty much currency strength in a nutshell there. And then yeah, just, you know, basically when you're using the algorithm, just think of it as a wall where price is gonna hit that wall, check it out, and then it's gonna just dump off, you know. So it's kind of like throwing a ball at the wall. You throw the ball, hits the wall, bounces off. And that's all you're doing. You wait for the ball to hit that wall, take the sell, bounces off. Take your money, put your stop loss and profit, let it ride. Rinse and repeat, the same thing. If you had to decide between choosing a buy and choosing a sell, just go with the red lines, keep taking sells. The highest probability of winning, the highest success rates.
Okay.
All right. So you like I said, you want to be on the 15-minute chart or the 5, whichever one looks, you know, the prettiest essentially. You're looking at the line, you see price dumps down, great, comes up, touches it, fails. Comes up, touches it, fails. All right, I'm going to take a sell on USDCAD. That's the way I would run it. Pretty much anything outside of that is not such a perfect setup. You'll find that as you start playing around with it. And these lines, they're pretty stationary. As the night goes on, more lines will appear, more alerts will pop up. Because as price moves up and down, it creates new highs, creates new lows, it reaches a new level, stuff like that. And you'll start to see alerts come up. Like I said, right now it's kind of like a slow trading time. It's kind of dead, you know. Even though this is kind of a setup, the biggest thing to remember is just hover your mouse over it. Make sure it's a weekly and a yearly, or a weekly and a monthly line. You don't really want to use the monthly daily lines. You know, that's a feature you can just disable. Like I said, you go to your indicator list, and right in the add-on, right in the indicator, you just turn daily to false. You hit OK. Any other questions, guys?
Okay, Can you hear me?
Yeah.
Okay. You mean the daily and the daily highs or lows? It's not that strong like the monthly or yearly, right?
Yeah. So the daily lines are not going to be as strong as your monthly, your weekly, and your yearlies. My best advice is to just turn those off. So once again, you go charts, indicator list, go right to your head on, see the daily level, you just turn it to false, and it's going to filter those lines out. One of the issues I ran into when I first started figuring this out was I was trying to trade any line. I'm like, oh yeah, daily line, no problem. You know, it's there. Take the trade. It just didn't have as much success rate. So you're much better off just waiting for a bigger, stronger line. So for example, that weekly and monthly line, and just wait for price to consolidate underneath it, touch it a couple times, take off, take your sell, and make your money, and then just get out of there.
Okay.
This is a good pair to watch, CADCHF. You can see CADCHF pop up sometime during this session. Kind of pop up, touch there, touch it one more time, and just dump off. What a lot of people like to do is use other lines for take profits if you decide to use a take profit. So, you know, you'd want to try to get in here somewhere, you'd throw in a stop loss. You know, in this pair, you got a little bit more room to play with. So, you know, you're at 20, 25 pips over here, right? So your stop loss is here. And your take profit, some people use this line, you know, would be at about 60 pips. So at least you know you're using like a 2-to-1 risk reward. So those winning trades that actually hit take profits, if you decide to use one, you're going to be sure to lock in a decent amount of pips versus just say like a 1-to-1, you know, oh, I made 25 pips, or oh, I lost 25 pips. It's part of the reason why I don't use a take profit. You know, the markets, in theory, can run forever in a direction. And you don't know you're in a trend until it really hits.
So when you're looking at your charts and it hits that line twice, are you looking at price structure or candles to know when it's going to drop?
Yeah, absolutely. Let me just show you. Biggest thing I'm on is price structure, candles, right? So I start at a higher level. I say, all right, well, you know, it makes sense to take a sell because it's at a high, right? So we're looking at that price structure. It's been in line, you know, staying within this general trend, this downward trend. Making sure you're taking a sell at a high versus like, you know, if the line was down here, I wouldn't be so confident selling it here because you have a lot of structure here, right? And then, yeah, once again, you're looking at that structure and that price action, right? So if you think about price action, you're getting close, you get down to a lower level and you're like, all right, what's going on here? You can kind of see prices just moving in this tight pattern like this. And typically that's an indicator of what? Price is going to make a move. And that's what the algorithm's all about. It says, hey, you know, we're going to point out to you the places where price is going to get stuck, where price is going to make a decision, where price is going to build those contracts, and it's going to make a rapid move from there. And you're going to be one of, you know, probably one of the first people to know that you're in a perfect position to take a sell, or a perfect position to take a buy. So definitely, you know, you're definitely looking for those wicks on the candles. You're looking for the price to consolidate. You're looking for it to waver back and forth and get stuck. And that's when you know you have a good trade setting up. So yeah, absolutely, definitely looking for that price action and structure. Okay. You guys have any other questions that I can answer for you? Okay.
Yeah.
Yeah.
Sometimes I see the algorithm indicator displacing the different line between highs and lows. But if I think it is depend on my our broker. Sometimes it
Okay.
will be a little bit higher or a little bit lower.
Yeah, so that's totally normal. So the way this algorithm works is it takes all the broker data for say 8 years ago, and it calculates, all right, a year ago this was the high, 2 years ago, you know, it was this high. Between each broker, you're going to have those data discrepancies, and it's going to be just like small amounts, minuscule amounts. But what it's going to do is it's going to push your lines a little bit up or push your lines a little bit down, and that's completely normal. It doesn't, you know, it doesn't make a huge difference whether you're with one broker or another. As long as the broker has decent tick data, you're still going to find valid setups. And even if, you know, if it's a pip or 2 pips or 3 pips off in the grand scheme of things, it won't change your analysis. It won't change it, you know, your trading or anything like that. Oh, we got a new player. What's going on, Jared? I don't know if he's got a microphone. All right. Nazifi, what broker are you using?
Yeah, I'm using Hot Forex.
Hot Forex? Okay.
Yeah. But I don't know whether they have much data for their algorithm.
Right, yeah. So you can always play around with different brokers. Any broker, you can make a demo account. So for example, if you wanted your charts to look like mine, you can go with LMFX, but you can use, you know, their demo account, for example, and you'll get the same tick data as their live account. And then if you want, you know, you can have, you know, a demo account set up on a different broker, and then your live account in another window, and then just use, you know, the algorithm on that demo and place the trades on your live account when you see it, and, you know, just plot it out on your chart with, you know, you can use horizontal lines. So, you know, you come to your live account and you're like, all right, well, you know, I can see the line on the algorithm is at, and it'll tell you, see 1.40478 is what it says. So you can literally just go to your live account, put it there, and be like, all right, well, you know, this is where the algorithm is. Yeah. And I can issue, you know, I can issue as many keys as you want for demo accounts. That's definitely no problem. But yeah, welcome, Jared. You're a little late, but that's all right. We were just going over the algorithm. If you have any questions, taking questions right now, just going over it case by case basis. Just type it in, it looks like. But for the most part, you know, I went over the algorithm. I went over what potential current setups we could have for the night, and then just my general strategy. I talked about currency strength. I talked about finding that perfect trade, looking for that bounce, right? Looking for the price to come underneath that line or drop below it and test it and play with it. And you just take a sell. You know, if you have in your mind that I'm only going to take sells, you're going to be a lot more proficient. That's why I'm teaching people now, like, don't take buys, just take sells. Look at the red lines, the lows, and just take sells off them. And people are having, you know, that's when people start taking their accounts from small amounts and turning it into massive amounts in a short period of time. Just if you're interested in like a story of someone who's made even more money than me, you can talk to Adam. Adam had $100,000 invested from a bunch of friends, and like an entire group of friends come in. Took $100,000, turned it to $180,000 in a super short amount of time, just strictly trading the algorithm. And he's definitely had a lot of success with it. He's a cool guy as well. Yeah, no worries, Jared. We're here to practice. Like I said, starting out, you definitely want to use a demo account till you get comfortable with your live. Here's an example of the alerts that'll pop up, right? So it'll tell you the pair time, you know, the type of pair, what it hit, and the price. So for example, like it just hit your CAD. It hit a high support resistance, so it's a green line. Like I said, we're not really looking at green lines right now, but if we were, you could come to it and say, hey, you know, price just tapped this level, and it's a monthly and a weekly. Cool, you know, since it's high, ideally for us, price would come up above the line, drop down, touch it, come up one more time, drop down, touch it, and then we would take the buy, assuming, you know, that the price would take off there. And once again, we would have a stop loss in place from the line, about 20, 25 pips, up to 50 if you're not going to be around. So 50 pips will put you at a new low. That's the biggest thing with that 50 pip rule. If you're not in front of your computer, you're looking to, you know, do whatever you got to do, just throw a 50 pip stop loss. So that puts you further out from the market structure. So say it does test down below, it'll play around and bounce back up. You won't lose your trade. If you're in front of your computer, you don't have to use a stop loss. Use a mental stop loss. You know, if it goes 20 pips against me and it shows a reversal pattern. So for example, your reversal pattern for this trade would be, you know, you took the buy, but the issue is the price dropped back down. It tests once, tests again, starts dropping. You're at that minus 20 pip point. You know that it's more than likely not going to come back in your favor. You just cut it real quick and move on to the next trade. It's one of the biggest things that traders have trouble with is accepting defeat, right? So you start off a trade with thinking you're right, you know, having a theory. This is a buy or this is a sell. And then it gets to where your stop loss was placed. And how many times have you taken that stop loss off or moved it or something like that? Once you get past that stop loss point, it's kind of like that point of no return. You enter this category called hope, you know, and you start to begin like, oh, you know, I really hope it turns around. I really hope this doesn't blow my account. What happens is one trade ends up knocking out a huge portion of your equity. And that's the psychological part of trading coming into play. Part of this software is eliminating that. You have to follow the hard rules in place, which is, you know, you're looking for a specific setup, which is the sell. You're looking for price to touch that line twice. You have a stop loss in mind. It's either 20, 25, or 50 pips, depending if you're sitting in front of your computer or not. And then you take profits. You know, once it starts going into profit, you just drop your risk. Drop your stop loss in the profit. Drop your stop loss in the break even. Whatever it has to be to where now psychologically, now you know you're in a winning position. There's nothing the markets can do to make you lose now. Worst case scenario, you hit it for a small loss, you hit it for break even, or you hit it for profit, even if it's just 5 pips profit. You can trade this system, and every time you catch that bounce and just drop a sell, it drops, you know, 15 pips, you throw your stop loss in, 5 pips, whatever, it retraces 5, 10 pips, takes you out, whatever, you made money, right? That's the biggest thing. People always want to get that big trade. They want to scoop every pip in the market. They want to capture the entire move. 90% of the time, that's impossible. You're going to catch it in drips and drabs. And if you're greedy, you see essentially you see the money on the table, but you don't take it, I guarantee you it's going to be gone the next second. How many times have you seen your trade just light up blue, you know, up $100 or up some crazy amount? You're like, wow, I bet I can get more. And then it just flies back on you. And next thing you know, you got out with nothing, or you got out with something very small. You actually lost, right? That's what these markets are kind of designed to do. It's meant to trip you up. But yeah, if you guys have any more questions, feel free to shout out. Jared recorded a bunch of things, but feel free to drop in anything that you might have a question about. Happy to go over it. Like I said, the video is recorded, so you can definitely look back at it. Definitely recommend that as a new guy. I went over a lot of good material. I'll be sending an indicator to the chat to help you guys with your currency strength. If you have any questions with that, just let me know. Where am I posting it? So I'm going to post this into the support chat. It's going to be where you can review it. So I'm just going to basically turn it into a video you can watch. I'll upload it to the YouTube channel, and then I'll post a link. Okay, if that's it, then we're gonna start doing sessions every week. It's gonna be on variable days. I'm gonna be doing it, you know, some weeks it's gonna be on a Thursday, some weeks it's gonna be on a Wednesday, some weeks Friday, sometimes, you know, Monday is just to start the week off, right? Just to keep getting a flow so everybody can start attending this. You know, so I know a lot of people work, a lot of people are in different time zones, so I'm gonna keep trying to change up the time. But yeah, I'll talk to you guys later, all right? Thanks for coming. Thanks for being part of it.
Yeah, thanks, Nick.
Yeah, no problem. Glad to have you guys around.
Yeah, I think that should be good. To keep in touch.
Yeah, absolutely. I'm here if you guys need anything, just inbox me. I'm basically around 24/7. Take care, guys.
Yeah.
You too. Thanks a lot.
You got it.